This is Dan Max at eXp Realty, aka the Trading Engine. This is your live market chat Friday, April 14th, 2023. Hopefully you're doing well. Grab some coffee, get comfortable. I think we need to have a little chat. 20, 30 minutes, maybe an hour. A lot going on today. I know a lot of people pretty despondent, frustrated, choppiness, endless, what seems like junk in the market, which that's kind of how things play out sometimes at inflection points. Can be very difficult. You don't know for sure until what? After the fact. So let's get into it. One of the first things is, we need to talk about are the financial earnings. They came out this morning. Again, not surprised JP Morgan beat. Not surprised, BlackRock beat. I mean, places where money should be flowing, considered safety when other banks were starting to implode. Not surprised, but then you look at PNC, Wells Fargo. I mean, Citigroup's kind of flat. It's tough to know for sure. And so my thinking as of right now with banks is just watch the reaction. I mean, I'm just watching how they're reacting. They clearly all gapped up and have long wicks. Will they close at the lows of the day? Will this be an outside reversal novice gap top in financials? Good question. Biggest thing coming up down the pipeline now is because, again, retail sales were a disaster. Next week, government has been on a 2-week hiatus. You have a budget talk coming, and nobody's talking about this. We talked about this was going to be an issue at some point. Republicans seem to have a plan that they're trying to create. The odds that the other side is going to agree to any of it, highly unlikely. Could we start the conflict that creates potential weakness? Was this a market run up to unload into? Is there a reason why Congress is buying puts, selling their stocks, unloading? We'll see. I mean, they're the best traders in the world, clearly better than some of us in normie land. So, if you got any questions, please reach out. I'll start there. I like to kind of give people opportunity to ask their first questions, and if not, I'll just jump into it. Because not to say that I really feel vindicated about what I warned about gold and some of the miners, but just because, again, clearly early and wrong. But just I want people who trade that stuff to understand, like, I've been trading gold and miners for 20 years, and there's times, again, people are like, why'd you get out? Well, I never trust the second quarter. It's kind of like you've been alive for 20 years. In the summer it's hot, in the winter it's cold. Well, here comes the question, right? With metals and miners, second quarter is typically weak, right? They've run up big. We talked about the formations potentially leaving, people to chase higher. And what's the problem ultimately is what? Like, the best time to buy stuff is when the Fed's pivoted or Feds pivot. I haven't seen a Fed pivot yet. So, again, longer term, probably the pullback will be a great buying opportunity. Who knows how deep it will is, but just manage your position. So, Randy, NSC, what are your thoughts on? They had a good size accident in the town. Yeah, again, so the thing about news and price action, if you're trading fundamental news like something like NSC, you can't really do that. Like, people are like, what does that mean? Well, the market knows. When the market knows something, it's priced in. If it's priced in, now the market's looking forward. Is it worst case scenario now? Again, NSC came out. When was that train wreck? Was it February? Clearly, it's pulled back 20-something%. Now, the thing that you need to worry about with NSC, if you're looking for the short, all the stuff that happened in East Palestine, I mean, it looks like a downtrend. But the problem is like, would I rather short this or short tech? And I've said this over and over. I'd rather short tech all day than transports. When I zoom out, let me check the monthly. Yeah, it doesn't look good. I mean, things that also to confirm, like, when the rails aren't doing well, in general, again, you can blame the train wrecks, but there's always derailments all the time. People don't realize. I think there's like hundreds a year of derailments in this country. Now, how bad are they? That's the question. 95% of them are not that bad. The price action, I mean, again, confirms a bear market. I mean, I try to warn people this for weeks and months based on the market. Yeah, you get dead cat bounces. And again, people remember, we've been long, we've been short. We talk about bear markets are traders' market that end with a capitulation down. Bull markets are traders' market that ends with a capitulation up. It's, people try to define it as something that things aren't. And That's the reality of it. So NSC for a trade here, I mean, unless you know something about the lawsuits, how it's going to play out, the potential for more problems, I mean, no one doubts that. But I don't know. It's clearly this 196, 197 area. That's your inflection point. This area in here between 196 and probably 207. I know it's a wide range, but you need a break below it. Have they had? I'm pretty sure their earnings are coming up too. So, what's up, Joe? Doing well this morning, hanging in there. Second quarter miles will be a good thing. Kind of for gold around 2,000. They will be making profit. I'm advocating going long there. I'm not waiting. No, this is the problem here. Fuck. No one listens. Miners are subject to economic issues. If there is credit crunch, market volatility, miners get slapped around. Because keep in mind, as much as they're going to say how well they're doing with their earnings, no one doubts that. But the problem is if the economy gets volatile, credit is tightening, it doesn't matter. Like, your favorite name, whether it's gold miners, miner, I mean, whatever. They all have subject to issues because if their balance sheets aren't great, which typically the miners aren't, they're subject to issues with credit availability. They're subject to the market because if the market pulls back, these names are in market ETFs. They are in the market whatever. They're part of the market. So if the market melts, miners don't hold up. And if gold pulls back, look at it. I mean, they're going to beat the shit out of this stuff because that's what they want. Think about like the Feds. If they want to pretend that inflation is under control, what are they going to hit? They're going to go after gold. The CME is going to raise gold margin requirements. They're going to do the same for silver. They're going to try to do it for oil, all these things to force liquidation. I don't know what people listen to on a daily basis. Maybe they're listening to some stupid podcast about people who are pretty smart about some things, but that's what I've noticed in trading gold and metals. Now, again, long term, I mean, if you want to disappear for 6 months and say, all right, I'm going to bite the bullet and just hold miners, great. Or if you want to buy a shallow dip, great. I'd prefer, again, for the VIX to spike, the market to do what it needs to do to get the Feds to pivot. Then when the pivot seems very likely, because again, we know the pivot's coming. If you go look at the Fed Fund futures, they're expecting it later, way later this year. Well, there's a lot of time between now and then for them to play games with the metals and miners. But again, I admit I was wrong. I mean, we picked the bottom. We nailed the bottom. Just didn't hold it long enough. It is what it is. And again, second quarter, now people go, well, you got to be evidence-based. Well, what's the evidence for continuously rising miners? What? The dollar? I mean, the dollar's not as weak as it was when these things, moved up. Remember, we got a higher dollar, but miners are higher. Okay, well, that's hard to kind of track. No. And look at the miners here. We talked about novice gaps. I said this yesterday on the live or the daily market review. No one said a damn thing about it, which is pretty typical. Said, watch out. This could be a novice gap. Could be a novice gap. We talked about gold, right? Gapping down, doji novice gap. Again, I mean, I don't know how else to say this. Like, this feels very distributive. Now, again, you see things at highs not roll over necessarily right away. Yesterday's action said a lot. And a lot of people probably weren't listening, but that's typically how it goes. So, man, I would not advocate buying miners. No, I would not advocate miners until they're absolutely throttled. That's the time to buy them. The psychology of miners is so up and down. Same thing with gold. As soon as everyone gets excited about it. Now, again, when the Feds pivot, in long term, there can be continuously cutting rates. Fine, buy gold. But what are we at now, right? People don't, again, I could be wrong, but I'm basing it on what? Experience, the history of the same recurring patterns, right? Same recurring patterns. The best time to buy gold is when the Feds are about to pivot. Well, 81% chance in 2 weeks, 3 weeks, whatever it is, that they're going to raise. I'm sorry, this is not the time to buy gold. Not to look for a shallow pullback and advocate buying. Again, second quarter is probably not even it. The Feds probably will not pivot until when? Third, fourth quarter. Whatever. I mean, again, that's just me studying the past. I don't need to listen to 1,000 talking heads talk about gold relentlessly. It's like, this is what I observed from 20 years of experience. Been pretty damn good at it. So S&P chart is replicating the psychology phase of the market cycle. Looks like we're going to the anxiety phase the next month or two. I mean, I feel like we've been in the anxiety phase for months. That's my interpretation of it. Look at the freaking SPY. Is this not anxiety phase? Here was panic. Here's anxiety. Oops, crapola. That to me looks pretty anxious. Choppiness action, right? Popping up to the 20-month. Dead cat bounce. Yeah. Again, this is what's so darn hard. I wish I could tell you tomorrow, next week, last week was the top. It's only easier to see. I feel pretty good about gold. Like that being a mark top right there. That seems very obvious. Oop, not on the monthly. Let me get the daily back. Let's get that daily back. That looks like a freaking top. Novice gap. Again, I know gold gaps, but still, think about the psychology. You have a $10 gap or $10 move, open, close on gold futures. Opens doji all day, distributive looking like, and then gaps down. If you take out 185s, be careful. Be careful. So, could it chop up here? This is the hardest part, right? Could, but it doesn't look bullish, that's for sure. Does not look bullish. I mean, this is the hard thing. Is like literally on Wednesday, the Feds admit that there's going to be a recession, high probability. Thursday, the PPI comes out. Everyone cheerleads it. They rip it up. And now today, the market's like, okay. Bank earnings, whatever. Credit crunch, credit stuff, still a problem. Market's kind of just la-la land, right? Everyone's like, oh, but you got to watch the options day, market option every day. And it's like, all right, well, I know greed and fear are back into the greed. I know the put-call ratios are back under 1. We'll see. I mean, this is the thing that people are looking for certainty because you cannot predict the effing news. This is what drives me crazy too, because say you're looking at all these different indicators and then Wednesday of this week, or say whatever day, pick the day, all of a sudden the news headline is what? Government shutdowns coming, boom. Market drops. Now people say, well, you could see that in the option. Oh, maybe. Maybe. I don't know. I've seen it not look like it, and then it happens. Right? Like, the market's really good at, the news is hard to predict. That's like the one variable here. Like, well, what news is that? Well, how do you know? How do you know some one politician isn't sitting here behind the scene going, all right, this is what I want to do, and I want to puke this out now? Or, not say politicians, but in general, some sort of news. There's always a power to surprising the markets or surprising your opponent, right? Like it's not like everybody telegraphs everything that they're going to do. This isn't the Fed. That's what the Fed's job is to do, is telegraph every move. Most news, government, war, company, they don't want to telegraph it. They want to unload or they want to get in front of it, however best they can before it happens. So, any other thoughts, questions, concerns? Got a lot of vitriol and hate about gold, and it's like, all right. It's like, okay. I'm just warning you, and again, Sam, I love you, man, but you're the type of person that you start building a thesis based on like what everyone's talking about and everyone's excited about. And again, when people remember how, and again, I mean, you were around, nobody wanted gold. Nobody wanted gold. The last Fed meeting, we're like, no. I was like, look at this action. The gold has been hated. Absolutely hated. Hated since when? Right? Since the Ukraine kind of fiasco peaked. And I wouldn't even call it like peak, but just like the peak headlines. All right, well, now it rips right back up to the highs in a pretty strong move. It needs to back up. Would I suggest a put option on gold? I would suggest that if you traded it yesterday, I mean, you can't chase today's action in gold. You got to be very careful. I wouldn't suggest going short gold heavily if you wanted to dip into it, but this is the problem. This is why people are like, oh, why are you early in trades sometimes? Because this is what happens. Like, that's a 5-point spread almost. A 5-point spread, you know? Like, do you want to set a stop on your put? That's hard, man. Yeah, same here, man. I look forward to just being patient. Better to short the miners? Yeah, no, I mean, I agree. I'd rather short the miners. Absolutely. Because they will get curb stomped. But they also typically, if you've been paying attention, if Eric's around, he knows this. For some reason, miners always get smoked during earnings. Typically. Especially in second quarter. Even if things are good. It's just relentless beatdowns in the miners. It's so sad. It's almost demoralizing if you've traded miners for a long period of time. And now that gold is back at 2,000, people are like, oh, they should be just killing it and murdering it, doing so well. But then you think about the economy as a whole, bottlenecks, the issues in mining in general, having the materials, the servicing of stuff. You ever trying to service things? Yeah. I mean, anyone paying attention to Newmont, I tried to point this out in the daily review every day. I'm like, this thing is lagging. Now, again, the mega miners are kind of what you have to pay attention to. Lagging hard as hell. Retest up here, and then the last couple days as the GDX is like flying to highs. This thing was acting like dog crap. And again, if Newmont's the leader, it's the leader, right? I mean, Barrick's another one. Those are the leaders. Junior miners, now again, they can always get bought out. It's just again, I don't know if I'd short. Yeah, I don't know how to say it. Second quarter, I have ingrained in my mind to always leave the miners alone in the second quarter. Sometimes leave them alone if they've risen them to March. There's a reason. Because there's so many times that I thought the second quarter was going to be fruitful to miners. And I just was like, waste of time. Yeah. I mean, it looks right. It looks right. We'll see. Because, again, this is the thing. What's so hard is at the highs, everyone's bullish. You can't, like, to have the ability to go, I am not going to chase this crap and I'm going to take profits. Right? No one does that. We'll see. Again, the one thing if you are long this stuff is that you have the ability to know that if geopolitical stuff picks up, that's why I'm not shorting gold in miners at this point. I mean, I'm just sticking to tech because geopolitical headlines, you never know, right? Yeah, worst cases with miners is raise stops come March. I mean, I think best case scenario is let the stuff come on back, man. Come on back. Just a little reprieve for a couple months. Let the seasonality take over. July is typically a good time to buy miners. We'll see. A lot of questions. Lot of yep. New Crest declined offer, then it upped its offer price. Gotcha. Yep, that goal was perfect. The short miner too. I'm okay. The mess up. Yep. BTC 25. Hold on. Let's check. I haven't checked out Bitcoin today. Newmont declined because it offered to buy Newcrest. Newcrest declined offer that Newmont upped its offer. Okay. Well, again, this is what we've talked about. You know, you've been listening to this. You know, we talked about how like the larger miners are going to have to spend cash and weaken their balance sheet to get more exposure. Bitcoin. This is you're in some inflection zones. 25,000. Man, I would watch how it acts at like 3,500 area. Because if this wick is like, it could end up being a outside reversal hammer. Now, again, if you short up here, this is where it's easier to short. So like this is like gold yesterday. Take it for what it is. And then you can tighten up your stop. Shorting gold today, man, it's a lot harder. It just feels like it is going to get burned. And it is burning. But we'll see. And again, a lot of, and this is what I always tell people. Like, I love when all the trolls and haters come out and go, oh, you were wrong. And it's like, yeah, dude, I told you. I bought 5 calls on dust. They went to poof. That was my only thing. hoping that it might turn into something. But I wasn't out here aggressively shorting miners or gold. I was just warning people that the higher they rise, please take profits. But most people don't listen. And then today's action, all of a sudden, all those people who are like talking junk, they'll disappear. And they'll just be like, well, you were wrong. And it's like, yeah, I'm not going to say I can't be wrong. Just like trying to pretend like you can't be wrong. Like, that's just not the reality of it. We can all be wrong. Worst case, the miners, yeah. Thoughts on silver? I mean, silver's in the same boat as gold. No touch. Bunch of novice gaps. Big red. Big red. I mean, big reds. You better be watching out for big reds at the highs. And here's the thing about silver, too. I mean, it's trying to get back up at the reference highs. You have to remember, straight line moves will find typically deeper pullbacks or longer chop. So if you're a silver friend of the silver stage, which again, I mean, people always joke about, talk junk. I'm like, I'm very long precious metals long term. Tons of physical. Anyone who knows me knows that I've been building a mini Fort Knox since 2013. So where is it? It's under my mattress, of course. It's a pretty hard bed to lay on, though. It's not supportive. But that's what you do if you want to be Donald Duck. Not Donald, but Scrooge McDuck. But I mean, that's the thing. Know how to manage this stuff. And again, I've talked about how if you're buying silver, buying gold, how to store it, keep it safe, hide the hell out of it. Nobody should ever know where the heck it is. Store it so that it doesn't but tarnish silver. Make sure you're wearing gloves when you're touching this stuff. Your oils can create degradation of the silver. Anyway, any other thoughts, questions, concerns? Because I do believe that if you don't own... Now again, I'll preface this. Bitcoin, I don't know who wins the digital currency battle. I've said this 1,000 times. I don't know. I hope it's Bitcoin because I know a lot of friends who own it and they've done really well. I hope so. I don't know who wins that. But inflation, I think, will anchor. The feds will cut. You have so much debt out there that needs to be devalued by the governments. Like, we're not paying back our trillions in debts. They're just going to have to devalue the currency. But they have to kill inflation first before they can do that, in my opinion. Or you get the hyperinflation, which, again, if that does happen, we can be late on. It's just that's not ever happened for the United States. It's due. Can't argue that. It is due. No one will doubt that. But I think the feds are going to get, and I've said this many times, at some point the feds need people to buy our debt. They need people to buy our dollar, and they're going to test the bricks, right? They're going to test people's conviction to this new world brick order, potentially. That's what I would be doing. Be like, all right, well, I mean, because again, you think about like the Silk Road initiatives financed by China, all of these different huge projects that are debt laden from the BRIC countries. Again, the U.S. has gone to war for less with currency stuff. So I think if they're going to try to bypass war, their best idea would be to what? Take the money that's in the markets, get the hot money that needs safety, because treasuries and the dollars have always been a safety trade, right? That's always been the instance. Like, I'm pretty sure they're going to test that thesis. What are one or two miners you would recommend for shorting or going long? If I was going to short, I'd just short the ETF, the GDX, and you can play that through Dust or you can short JNUG, you can short all of the leveraged. I mean, those are to me my favorites. So, yeah, I mean, just keep it simple because I hate shorting individual miner names because at any point they could get bought out, right? Like some of the smaller ones. And typically that's the thing. They do get bought at the highs in the cycles. Keep that in mind. So I've seen that a lot. Think about like Newcrest and Newmont near the highs. Like who's buying miners now? Idiots. Absolute idiots. BA, yeah. Man, I didn't even talk about that. That's a huge one. Having some issues. This is a big gap down. big chop cycle, gap down, professional gap, big volume. The logic is there, Zach. The logic is there. The logic is there. Whoa, man. Wow, look at metals. I mean, that's the thing I try to explain to people. Like, they move so fast. If you don't take profits, the market will take them from you. The joke is, and it's not a joke, gains are not real until realized. So people sitting here talking junk constantly about, oh, you were wrong on the metals. Telling us to get out in March, be safe for the fourth quarter or second quarter. Okay. There's a reason. There's a reason. If you took one day off, you could miss a big amount. I mean, that's the nature of this market too. You got to be careful. Like, velocity begets velocity. Like, the VIX getting pounded, rising, chopping all over the place. And now that the VIX has gotten back down in the compressed low end of the zone, fair risk zone, does it seem like at some point the market's going to wake up? I just hope it's sooner than later for my patience. Kind of lost it. I said yesterday on the Discord, I'm like, man, this is really getting stupid and frustrating. Like, endlessly stupid. Because we've talked about the novice gap trap top on the SPY in February, but look what we've done. Just a whole lot of dancing. Here was that novice gap trap. That was a spike in the VIX into the 20s. Now you're back at the highs. It looks like a big complex head and shoulders pattern. Left shoulder, head, right shoulder. Now here again, big green. Big greens have led to what? Potentially rolling over. So this candle today, new highs. If this thing takes out 408, that's uber bearish. But but they've done a lot of these signals where it looked like it. Like here, thought this one from the Fed day. Then 3 days, builds a floor, rebuilds, comes back up. Trade around your positions as needed. Be safe, be thoughtful. Did you trade OTC back in the day? What are your thoughts on OTC? I think of OTC, I think of over the counter. Talking about the stock? Yeah, no. Like OTC pinks? Like penny stocks? Give me a little more reference, because I have a lot of things going through my mind when you say that. I hate penny stocks. Absolutely hate penny stocks. No, I don't trade penny stocks. They're all pump and dumps. If anything, I'd rather short them than ever go long them. Again, the odds that a penny stock is going to go and be something worth a shit. It's just, I've been pretty good about picking them if I long-term hold them based on certain things, but in general, I mean, poor people trade pink sheet stocks. People who are trying to get rich off of trading are trading pink sheets. I mean, it's like the Wolf of Wall Street. It literally is. Like the easiest trade is to short those things when they pop. Because somehow they get hyped up. Someone creates a note. Some fake newsletter, brokerage, BS. I mean, it's been crazy how many we've seen. Some of the folks have been around. Like, I've called them out when they tried to get relevant, especially in like stock twits, and laugh at them like, man, I can't believe people are buying this hype. It's like, I mean, it's penny like minor stocks too. I'm like, do you guys realize like management just keeps selling more shares and funding their lavish lifestyle, knowing that endlessly people will buy the hype that they create? Stupid emotional damage. Yeah, I mean, Apple's hard. I mean, Apple's going to have a 40% drop in earnings, potentially. Like, that's what's being forecasted based on Foxconn and all the revenue potential of what's going on. And it's like, all right, this thing just rose. Right? Like 35, 40%. Maybe not 40%, but my point's like, oh, God. All right, we'll see. I mean, again, Apple is in the zone at the trend high, Got to break the 20-day. Speaking of 20-day breaking, right? NVIDIA. Somebody on StockTwitch was like, I told you this was going to fail. And I was like, yeah, no, I believe you. I've been talking about shorting it since this. Adding. Now it's under the 20-day. It's like, I don't get what people are talking about. 20-day, here you go. You nailed me on yesterday's recap. I'm trading some around my positions, but need to do it way more. Shannon, this is what's so hard is that, the more something chops around, at some point you have to think that it's not, right? Like, that's what gets so hard here. The longer something chops, the less likely it's going to chop, right? The compression will lead to what? The big move. And so that's what gets harder about trading around the positions. I've been bad about it the last week. I'm, just like, that's why yesterday I'm like, are you effing kidding? I'm like, the PPI numbers, whatever you might want to take from them. I mean, the Fed just announced that they are expecting a recession on Wednesday. They said PPI is coming in. Now, again, PPI. I mean, you got to talk about again, the data is all rear looking. The evidence and what I'm seeing out there, again, price drops in housing fast. Talked about the trucker miles, dollar per mile charge prices coming down like a rock. Shipping containers dropping like a rock. Diesel demand in Europe falling off a cliff. OPEC has to cut supply to stabilize price or it could get absolutely smoked. I mean, everywhere. Commercial real estate, an issue. Again, banks tightening their credit. Interest rates on credit cards skyrocketing. I mean, it's all like the stuff. It's like watching The Big Short and knowing it's coming. It's just when. And to think that somehow, like, we're going to bypass a recession. And, think about it. We always talk about, like, the COVID cash blew out the market upside, right? It created the bubble. It like, filled the bubble to the brim, and now all that liquidity has to unwind, and premiums that retail traders were willing to pay aren't going to sustain. Like, people will, again, things will trade back to their value, right? Think of like Shark Tank, like, and everyone's like negotiating, like the smart money with capital is just sitting there like, oh, we'll wait, we're not paying 30 times your future earnings. They've seen this game before. Now, again, this can all be negated if the Feds go full printing press and blow out and pump liquidity. Like, that's always the wild card, right? But in general, no. I mean, people don't understand how a bear market ends. It does not end when everyone's bullish. That is not how it ends. That is not how a bear market ends. I mean, I'm just kind of laughing at, because there's a lot of smart financial folks out there that I think are trying. And again, they get swayed by the market action. They're trying to be thoughtful, but when do you bottom and everyone's excited about the stock market? Like, people talk about like topping. Like, you can't top if everyone's bearish. Agreed. Market climbs that wall of worry, as they call it. But to sit here and just constantly be like, the market's bottom, I'm like, no, I don't think so. Again, VIX 38 max. I review this constantly, and I just like look at people and I go, you really can look yourself in the mirror, look at my comments, and just say to yourself, you know what? Yes, I believe the bear market is over. Like, zoom out on the monthly. I mean, you don't even need to. These have been gyrations that cause VIX 48 moves. We bottomed with the VIX 38 in a bear, which to me I think is probably going to be one of the bigger bear or drawn out bear markets of our lifetime. Because I think inflation is going to be sticky, and they're going to have to continue to like play this game with the rates. Like, they don't have the cojones to raise over 5, 6, 7%, 5-6% quickly. I think that's how you stamp out, because how they say, like, you need to get the Fed funds rate over CPI to really kill inflation. Well, now say CPI is 5%, but as oils continue to rise, housing costs continue to rise, services continue to rise. Holy crap! Try to find somebody to do some service for you, especially in a trade. They're jacking prices left and right. I mean, to replace a valve used to be, in a house, they'd charge you $100. I got guys quoting the clients $250, $300 to change valves for toilets or under sinks. It's like, holy crap. And they're like, man, we gotta eat, dog. Gotta eat. I'm like, no, I get it. So, any other thoughts, questions, concerns? Happy to see First Solar dropping for the fam. I know some folks are short on that. What's Meta doing? Meta is just so annoying. But I guess the common sense belief is that they're getting rid of TikTok. No, they're not. TikTok's eating their lunch. And again, go look at, Instagram. Absolute joke. Like, Instagram is dead. $1,500 labor to replace a power steering rack. Yeah, $1,500 labor. That's crazy. My garage door broke. To replace, the torsion spring for that, it's just above your garage, right at the door. Typically $350, $500. $750 was the quote. And I'm like, called a couple. I'm like, geez, okay. I thought in my mind, I'm like, to replace those springs and to kind of clean up the garage takes some guy an hour. $750. Okay. And again, I've been in real estate a long time. I mean, that stuff is not hard to fix. I mean, it takes one guy with a half a brain, an hour and a half if he's not experienced. $750 for a garage. I mean, I don't know. Just seeing this all the time. Landscaping stuff. Yeah, seeing it everywhere. I think inflation is going to be sticky. Did anyone see too where the wages are still based on calculate for inflation are still coming down? It's like 25 straight months or something. Like, well done, Sleepy Joe. Well done, Congress. Well done. Yeah, grocery bill way more. It's crazy. So speaking of grocery, I mean, we can complain about this or talk about the market, but I do all the shopping because I pick out the meats and the proteins. I like to cook. My wife does cook as well, but holy crap. Every time I go to the grocery store, it used to be $50-$60. Now it's minimum 100. Minimum. I don't, again, and people will say like, oh, everything's fine. It's like, okay. Well, now unemployment's going to be rising, right? Because that's what the feds need to do or will do, right? Like they can argue that unemployment is at a good rate, even though it's crazy. Because if you look at I'm reading BAMPS. If you actually look at participation rates, they're absolutely dog crap. It's so bad. But again, we can argue macro and micro forever. And this is the thing. The market is going to do what it's going to do. I anticipate things getting worse, but in the back of my mind, I always have to know. Can be wrong. You can be wrong. You can be wrong. As of right now, people keep saying, well, does the evidence look wrong to you? Like you're wrong? I'm like, no. We've talked about the lagging sectors. We've talked about the leadership narrowing. Now the old leaders, which were the megatechs, are they making lower highs? It looks like it. Are they chopping out? Like they're not like just running up like they were, right? Semiconductors, they're lagging, right? Now, I'm not surprised financials popped on earnings today because, again, 3 weeks ago, I would have told you I don't think it could get to 33 on the XLF. I thought 32s as we talked about. But if you're up this high, why not? We talked about this mid 32. Well, here you go. Gap up. Now, does that look bullish, though? Because, again, if this was like a 10-minute chart, an hourly chart, people wouldn't be too confused. They'd be like, oh, dead cat bounce after a big move down. Right? I mean, I would think it'd be that easy. But nope. Like, for example, like NVIDIA is finally under the 20-day. Right? I mean, semis, we showed that. We talked about Netflix, some of these names. I mean, again, you can go through them all. AMD looks really bad. Taiwan Semi looks terrible. Boeing just broke, potentially. I mean, you pick and choose. I mean, talk about Caterpillar, which had been a leader for a long time. Looks like crap. Pulling up transports, right? Because the transports typically lead. They don't really look that good, right? And, think about it. Like the whole market, February highs, March, January highs. A lot of these things are lagging. Again, Matter of when, not if, of the next rug pull. I wish I could tell folks it's going to be tomorrow. I wish it's next week. And again, anyone who like claims that is just, because last week they're probably, it's going to be on the CPI. And then the week before that, it's going to be on this and on the jobs numbers. And I don't know. I don't know what the market's waiting for. What the hell are they waiting for? I mean, maybe it is waiting for Congress to say, budget no good. First Solar. I mean, all these things. I mean, it's the evidence to me is actually showing more weakness, but it's being masked by the price action and the indexes. Congrats. Remember we talked about yesterday, if you shorted up here in the 212 range, that looks good. Didn't feel good, but today you got to be a little happier about it if you shorted it. Apple, the fruit, playing games up here, filling the gap, talked about that. Long wick. Yeah, Meta is the only one that's like just annoying me. Like, why? Who's still buying this? How dumb are you? How dumb? How dumb? Gold today. Now again, gold has been leading up. Just keep an eye on it. I talked about this 185 area. Look below it. Does it fail? Questions. Who knows? SPY 405 415.09. Yeah, I mean everything looks. I'm telling you, it doesn't look that good when you open up the hood. But the average person does not spend time reviewing all the sectors, reviewing a lot of stocks every day and going, well, it must be bullish. And I mean, I see the folks in the Discord and we're like just losing their minds. Again, as I am partially too. But I'm like, man, I got to trust the evidence. I got to trust the evidence. It's just, please do not give yourself a shot clock. Did you stop out of meta puts? No. Did not. Probably should have. Not good. Not good at all. But that's where I've been layering largely SQQ, Soxis, trading those a little more with stock. Because I don't want to, again, in my mind, I'm like, man, I've got time on these puts, but I don't know when this stuff starts. And the decay can be very frustrating. And trading around the options can be a little hard. Because it spreads naturally. So I've been trying to trade around Soxis and SQQ. Talked about yesterday. We talked about the other day. Soxis, what is it? 1810. Bought that. Took $1. SQQ in at like 30.30. Bought a little more at 30. Went down to 29.58. Trusted the evidence. I'm again trading around it. I don't think there's much upside left to the markets. We'll see. I could be wrong. It's been hard. That's the thing about options, right? Like, give yourself as much time as possible, but also define your risk. Define your risk. That's why I tell people, like, your options account should be 10% of your stock account max. Because if you lose all 10%, it wouldn't be the end of the world. But a lot of people can't do that and afford that. So then you got to be very vigilant. Very vigilant. It's hard, man. It is really hard. But I look at the number of shares that I can trade as well as the compared to the stock and the options. It all ends up hopefully being a good thing, a wash. I'll be okay in time. And if not, wrong happens. Wrong absolutely happens. It can be frustrating. But try not to get frustrated by it. Just learn from it. All right, next time, what do? Be more vigilant about your risk control. That's always the answer, actually. Be more vigilant about that. That is always the answer. Because you can give yourself time, but if the price action is wrong, it's wrong. Right? Like looking at Meta, can't say, oh, that's a great short. No. Can't. Cannot say that. I mean, man, we're just right at the top of the VAP zone. It feels like a trap on the monthly. I've been saying that. What seems like a broken record. Like, are we really going to get over the 20-month? Or is this going to be just another one of these wicker furnitures? And we'll be right back at 205 within a heartbeat, a fart beat. Any other thoughts, questions? Man, look at the dollar. Look at the dollar. It's interesting to see the dollar rise and the bonds get sold here. So we talked about in yesterday's review, I said, man, that's interesting. You basically filled the gap. Now, again, gaps on the UUP, gold, they're worth watching, but they're not like the most important things because obviously these things trade futures all day, essentially. Interesting retest of this, but if you look to the left, there's definitely some VAP in it. Some VAP in this spot. So, and it to bounce. Keep an eye on the TLT. I know we've talked about this. Is it going to break? I mean, is this a novice gap? Because again, I think if the market starts to peel back, then bonds get bought. But is this the break? We'll see. Could it get back down into like the 103s? That's where, again, not really trading bonds because I don't know if there's a lot of meat on the bone. Essentially, I think buying them on a dip at some point makes sense, but I don't know where that dip ends. I'd rather have a reference. Man, maybe you feel that gap would be that'd be the sickness. How long can something chop for? If you're new, no, Jay, I feel like you've been around. I talked about this. If you don't remember the IWM, look at this. Basically all of, like 2021. I mean, look at what it did. Just chop, chop, chop. You don't want to believe chop can only last so long. But then when you go back and look at the evidence, you go, oh, fudge. Like, chop can last as long as it needs to. First Solar, again, I mean, let's check out oil real quick. Okay, there we go. A little more weakness in the markets. Yay! Oh, not that oil one. I hate the USO. I like shorting it because it deteriorates. Deters. Sorry, I got so many damn screens and stuff going on. Okay, interesting. Hey, so whoever was talking about Bitcoin earlier, we are back under. So oil here is dead cat bouncing, right? OPEC, James, you've been around. You know what I mean. We've talked about, like, OPEC is not cutting supply because demand is outrageous for the future. No, they're trying to figure out how to what? Manage risk in the future. Again, it's like when the feds cut rates in emergency rate hike. It's because shit is going to get worse. Well, if they see oil down in the 60s, right, low 60s, they're probably going, well, crap, man, we probably need to cut supply because demand outlook is what? Deteriorating. Okay. So it gaps up, multi-chop. Now it's back into this mid-80 range. So it's probably going to be a tough cookie to crack. If it goes higher, maybe it's geopolitical. If it holds up, feds hate it. They can't like that. So then you go look at like the solar stuff. And we've talked about this. This is what's so hard. Is like, when do they crack? Right? Because I've said this a billion times. Like, if you're not familiar with First Solar, I mean, it can have a $100 down month. And then just like it can have like a 40, 50 up month. When? How long for the chop? I don't know. But this stuff, it's looking pretty bad in my opinion. It's starting the big red candle in my opinion. Because keep in mind, remember, most tops have a big green first. Right? Big green or indecision after. Big green, red. Some big greens. We'll see. We'll see. And then that's where, when the monthly looks like, oh, it looks like a V top. But then you realize, like, you start looking at the intraday, right? This is what's so hard is, like, I look at First Solar. It's a double top, right? Blow off, trap, get everybody buying it, double top. But First Solar is like, the liquidity. Think about it, right? If it only trades, a couple million shares a day, it's pretty easily to manipulate. So that's where it's like, I mean, how many times have we watched First Solar and it goes $1 or $2 higher and you're like, what the? And then it all of a sudden is down $5. Like, it can move pretty damn quick. And that's where if you own First Solar, you got to trade it. You definitely have to trade it more aggressively. Good question, though. Good questions. Again, I mean, I don't mind being completely transparent because this chop, it hurts me. Like, I'm not sitting here going, oh, I love this chop. Oh, I'm making money hand over fist. And people notice, like, there's really nothing to say other than I wish and hope people can manage through this. If they're all in options, fudge. I can't really say. Like, that's the problem here with options. You either have to day trade them or trade around them. And when they're right, they're right. Like the FAS puts, right? Like, that was an epic, easy trade. It just went. We talked about taking that off. We talked about it was going to rally. Well, use the rally to buy FAS puts again, but give yourself time and then know in your mind, like, you made a ton of money on those puts. Limit your exposure. We talked about, like, the puts went from $7, $8 up to almost like 20. Well, the next puts you bought, $5, $6, $7. There's your risk. That's your risk. Don't ride those puts endlessly and not harvest any gains. Right? Like, that's no bueno. Speaking of financials, low of the day. Low dough. Low dough. Low dough. This feels like a novice gap. Professional gap starts the chop move. We don't know when it's going to end. Little baby gap. Now, again, you could have said, well, it had to be earnings, right? Well, yeah, I mean, that seems logical. But the action choppy, then you novice gap up. That's hard to predict. That's hard to predict because, I mean, I see some of the, I mean, I look at the bank earnings. I go, I don't think there's really anything to be impressed about. The market seems to like JP Morgan, right? But here we go, coming back into the next VAP zone. Remember, mark up to be sold, mark down to be bought. That's what happens sometimes. All right, any other thoughts, questions, concerns? Going to wrap it up if not. Focus on the hater channels. Not getting a lot of it today. Seem pretty quiet. Let's see if we got any Twitter trolls. Nope, no Twitter trolls today. Interesting how quiet they get when they're wrong. Again, I consistently try to put out my thoughts. If I'm to be like just sitting out here and think about it, like, yeah, of course it's easy to attack. I've told him, like, yeah, you're an easy target when you're trying to constantly be updating folks. The odds of always being right, just not possible. Haterade, yeah, a lot of haterade being drank yesterday. And again, I felt the frustration too. I'm like, man, this makes no effing sense. Like, what is going on here? PPI coming down? Yeah, because the recession's aggressively going to be coming, in my opinion. Commercial real estate, huge problem. I mean, think about, like, you're hearing like businesses begging people to come back to work. Begging. They're like, nah, I don't want to. I don't want to come back in. What was I reading? Someone like BlackRock, I think, bought some building that sold for, like 30, 40, 50 million, and they bought it for like 10 or something. I was reading, like, dude, they are just, again, but they might be bag holding, right? Because I don't know how about you guys, but maybe leave some answers here. Automation is coming, and the need to have an office, a big office to bring in a full workforce. I think that's the horse and buggy. That's like investing in taxis. So imagine if there is a commercial real estate reset, because that's probably more likely. It's not going to be residential because you have a shortage of residential housing. Yeah, here you go. I mean, that's funny. I'm on Twitter. Record 30% of San Francisco office space is vacant. I mean, do you think people are actually going to come back to work in San Francisco? Like, for example, like, no way. No way. So, all right. Any other last thoughts, questions? Like Nucor, I'm seeing some red flash low of the day. Financials low of the day. Nucor just hit low of the day. Let's see who else is flashing. Gold is not. Man, gold had $1 bounce, which, not surprised, but is it going to hold? Damn, TLT low of the day. I mean, there's the one of the things that you look for in market inflection points. Obviously, chop is natural, but you see wide and loose moves, though. You will see the volatility, even if the VIX isn't necessarily spiking, but you're seeing bigger moves in certain names that you follow, right? And maybe not big moves, but wide and loose, like up 5, down 5, up a couple points, down a couple points, and then ends flat, right? or ends up a few points one day and then a few points down. Like, you have to remember, like, they understand, when I say they, the market makers know that there's a thing called trader fatigue, right? You give up on going long at the lows when something just seems like it's just never going to go higher. They know you'll give up trying to predict the next move at the highs right before it goes lower to get you all in, right? To hold. Oh, it's too volatile, I don't care, right? Like, that's one of the things that I used to remember, like, traders talking about. Like, man, I'm just going to hold out. Yeah, we're due for a pullback, but I'm just going to, I mean, it's been so strong and choppy, I don't really want to time it. And, you hear people, like, start changing their rationalities behind things, right? And it's the same thing at lows. Right, like, I'll just wait for a lower low, or I'll wait to buy. I'll wait. It's like, okay, yeah, you've given up. Like, the market's really good at getting people to give up. I hate to say that that's one of my downfalls, maybe, and maybe other people's too, is that when it seems like it's going to happen, it because you've experienced it. You're just like, is it going to be tomorrow, next week, next month? You're like, this is just a matter of time, not if. No, I don't think Meta is gonna skyrocket from here. I think if anything, it's playing the game. I just literally said, I think on the monthly, it's gonna be a long wick. It's just gonna end up being a very long wick, like it does. Again, if you go look at the analytics on Instagram, it's dead. Instagram is dead. Now with AI, people can get inspiration from photos. They can type in something and AI will draw them something amazing. Instagram, again, Meta, stop paying content producers. TikTok, YouTube, all the major social media outlets. If you create content and you have a following, they pay you. Meta stopped doing that. What do you think that's going to do? Out the door. People are like, oh, well, then I'm not going to, again, because it is like a job running social media. But posting on Meta, if you're not paying people for especially the big influencers, just to post on it, they're not going to do it. At a certain point, it's like, well, everybody's on every other platform. Do I really need to post on a platform where I'm not going to get paid? Dangerous. That's why I always joke. Like, one day that MySpace Tom photo will have Zuckerberg's face on it. Oh, I like that. I like that, man. I like the IWM. We've talked about, like, the 179 range. I know you've been paying attention. We talked about the IWM 179 range. Look where it popped to today. Dink. Dink, dink, dink. I like that. Also, nibble more some NVIDIA. Again, people, it's, and so here, let's talk about NVIDIA and I'll wrap it up. The psychology of NVIDIA, right? What has been, now remember, we talked about at the lows last year. Like, this thing had just been throttled. We're like, this is probably going to bounce. It bounced here, failed here, rallied up, pulled back, rallied up, playing games, whatever. Playing games with your heart. Now at the highs, the psychology is what with NVIDIA? It cannot go lower, right? The market psychology that is being imprinted on the retail and average investor is what? NVIDIA is the future for AI, right? Like, that's the basis. Well, notice what it's doing. It's chopping up here. As the aggressiveness of calling for the ultimate AI investment, now it's dying up here. We talked about, like, this is all distributive up here. Now you're under the 20-day. When? When does it go? I don't know. But this, to me, is the easiest shorter because, again, when you mass psychology is all in long. Remember, at the lows, nobody couldn't find a single person who wanted to buy. It was crickets. Crickets down here. Now you're up here and everybody's betting on it and people are going, well, it's going to the moon. I can't, I've seen people, I've talked to people. I guess I can't see them talk. Well, technically you can, but listen to them talk. And, they bought some at 230, I think. Some of these guys I was talking about, they're like, I'm just going to hold it forever. I think it's going much higher. Well, so they bought at whatever, the market gave them a profit. But now they've, starting to realize, like, I asked them, like, what do you think about that? Like, AI, isn't it going to be free everywhere? It's just going to be like a feature? No. They'll do the best. Okay, no one's saying they won't, but at 130 times whatever future earnings, competition is always potentially there. A lot of things potentially could go wrong, right? But who cares about the macro at this point? Look at the price action. The more aggressively it is touted as the best AI, best semiconductor to buy, what has happened? Look at the chart. Chopping. Right? Think about the rubber band man theory. Y'all remember, right? The farther you run when you're fresh, the less of a pullback. But then as soon as you get tired, the pullbacks start increasing in amplitude. Right? Getting a lot more tired up here, right? Straight down and then chop, 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 chop. One last. Well, is this the one last head and shoulders top? Time will tell. Time will tell. But to think that you get right back up into this VAP zone, coming off the highs in a bear market, again, if you're not familiar with what happens to semiconductors, they are absolutely dog shit once inflation entrenches in, and they cannot sell their products for fatter margin because of deflation. Remember, everyone who makes a chip will make a better chip going forward. And so the inventory that is on hand costs more and more to produce. That's where they're screwed. Well, there's a glut of chips now. They have to sell chips. It's like they have to sell chips to function. They're not like OPEC and can sit on them. They have to sit. And then all of a sudden, everybody's selling chips, cutting margins or cutting their margins to sell just to get the stuff off the books because their next iteration of chips are much better and people start waiting for it. Again, if you study the semiconductor cycle, it is ugly when it gets bad. Yep. Nice trade on that. While we're on, again, I like the item. And we talked about this for weeks. And here's another, and we talk about evidence. Sorry to rant and going on, but like evidence of the market strength. We said watch for lagging. Qs and SPY are up here. Where's the IWM? Where's the IWM? IWM leads. Does it look like it's leading a bull market higher? Does the IWM look like it's leading a bull market higher? The answer is obviously hell no. It's not. Not at all. Not even close. No, not at all. And again, but the bulls, again, they'll get on Twitter and people, again, will listen to podcasts. They'll listen to Josh Brown. They'll listen to CNBC. They'll listen to people and they'll, oh, it's bullish. Bullish, you got to be a bull. Now, again, for a trade, can't argue that wasn't the right trade. But to stay bullish, you got to be high as a motherfucker. It's Friday. I got nothing to do. Think about the movie Friday. Like that's crazy. It's crazy talk. So, any other last thoughts, questions, concerns? I appreciate everybody's support, love. Not much donations lately, but I get it. Again, I don't have anything to donate. I need to have some wins. I want people to win. That's all I care about, man. That is all I care about. Being a better trader, surviving, anticipating the action, being patient, but also managing positions, defining risk, doing the best you can. Because the big moves, again, it's like people don't realize, like the XLF move, if you traded it well, it could have made your year. Could have absolutely made your year. And if you played those puts that went to the moon, made your year. No, I appreciate you guys. Because again, I think this is the thing about trading is that when you don't do well, people start trying to find new things to do, right? Always, like, this is a hard conversation, and I'll end it here. A lot of people, when they go, all right, well, the markets have changed, you have to adapt to them, right? Well, let me try changing my trading. I'm going to become more of a day trader, right? Or I'm going to become more of a swing trader. I'm going to do things differently. Well, the problem with that is that you're trying to change to the market versus just focus on the fundamentals, right? Like, what works typically, and stick to it. If that means you need to be more patient, sorry, Joe. If you need to be more patient, then be more patient. But don't change your style. And this is the thing, like, people are like, well, I'm going to start buying calls up here. I'm like, fuck, okay. Or they're like, I'm just going to buy some puts and wait. Okay. Well, now that you've made that clearly, abundantly obvious, that's what you want to do, then do that. But still define your risk. Don't just start changing your mind and go, well, I'll let them run into the ground, potentially. No, if you're wrong. This is hard. This is because, again, this is the thing about the markets, right? When they're not chopping and they're directional, much easier. When they're chopping, it's hard as hell, man. It's really hard. And do you want to anticipate, chop, retest? Yes, we've talked about that endlessly. You go watch the back to basics, like talk about retest, retest, retest. When they don't retest, that's the one-off move. Or traps, retests and traps. Those are typical. Just don't know how long that's going to take. That is like the one question, the one factor that people just in their minds, they go, well, it has to be now. It has to be now, right now. All right, now. Like you've seen Super Troopers. That's the problem. It's not. And so when you put that kind of pressure in belief that today is the day, now is now, and it has to happen, you're trading on hope. And as one of my mentors said, if you're trading on hope, be careful. Because Lady Hope is not always your friend. And meaning like, you hope you'll be right. But hope does not drive the market, right? The anticipation of hope. So you just got to be thoughtful. You got to be careful. And again, I try to make sure people who follow, I like looking at the sentiment from the perspective of the retail trader. We've talked about recently on Stock Twits, Fin Twits, Wall Street Bets. They are all anticipating a Fed pivot, monster rip higher in the market. They are being fed the data, not the data, they're being fed the market anticipation from the media, from what? From the few leaders that are leading, but also getting comfortable with the mass thought process. Like that's the hardest part with trading, right? It's really hard for me to sit here and go, you know what? And again, if Eric's around, Scott around, some of these guys, the hard trade is usually the right trade. You don't want to sell gold up here. You don't want to take profits at the highs because everybody's telling you it's going higher. That's a problem. The short, remember like when the XLF and the financials were getting smoked, we're like, everybody's anticipating the end of the world. It doesn't always happen. So there might be a dead cat bounce. So be aware that the XLF, when it got down into the 30 range, we talked about this, so obvious. I'll show it to y'all again. Just again, newer folks. I don't know who's new or not. But sometimes it's better to hear things over and over and over again. Are you surprised that the XLF bounced at the 2008 7 highs? 7 highs, I guess. Previous highs? No. And the Feds did all they could to try to stamp out contagion? No, not surprised. But now you've gotten back up into this 32, 33 range? Okay. Yeah, I find it's always harder to take profits because it always is going higher. Yeah, like that's the mindset. People are like, it has to go higher, has to go higher. In a bull market, different. In a bull market, different. We're not in a bull market. We're in a trader's bear market, volatile. And again, if you're sitting here looking at the thought process of shorting the market with the VIX and the 17s, and you're going, I don't know, I'll have to wait. Okay, just be careful. Just like gold, you could get a huge gap in the direction of change. I don't know what would cause it, but what if today ends up just being an absolute slaughter Friday? Who knows? You don't know. And that's where layering into position, managing positions, because again, all or nothing trading is essentially is gambling with the anticipation of cannot be wrong. I mean, I wish, and then we've talked about 30% of the time you'll probably nail a trade, but the other 60% you're way early. Or not way, but you're early. And then 10% you're going to be wrong, especially if you know the levels. Yeah, dollar steadily rising, bonds steadily selling off, the VIX, I'm surprised it's doing what it's doing. I would think it's be slightly higher, but that's fine. This is the thing. If the market starts peeling off and the VIX is low, great. Even more room. But I'll end it with this, and this is something that's interesting, right? Like if gold has been, to me, probably the best performing asset in this up move, would we argue that? Could anyone argue against gold and the miners being actually the leaders of this up move since October? We all not agree? Pretty damn good. Maybe throw in semiconductors, right? But they already peaked. Think about the cresting wave. Everything eventually gets pulled with it. Again, maybe gold holds up, but I'm going to be watching silver and the miners. Hard. Because if they start rolling over, what else is leading at this point up? And I'm talking about big sectors. If you want to talk about like one-off stocks, I don't know. But are we not watching oil? They're out, man. I feel like there's so much to say always as soon as I'm about to wrap it up. XOP, right? Nice bounce. Getting sloppy up here, getting tight, right? Solar, obviously, man, all over the place. Hot topics. Look at that again. Railroad tracks. Looks like it's about to do the drive lower. Nat gas. Hopefully it's up for people. Tesla, right? We talked about this thing's just been dogging it. Stuck. Does this really look that bullish? Material names, right? We talked about like, man, whoa, X down 3%. Damn, taking out the range lows. Okay, let me pull up Freeport real quick because a lot of these names were flying yesterday. On the X div. All right. HYG, right? We talked about that one. Can't get over. That's big volume yesterday. Is that distributive? Question mark. It's not really getting the follow through. Man, XBI. I hope Wild Warrior, if you're still listening, I hope this thing fucking tanks for you. Would want to say higher. Again, it's things that are higher in my opinion that are overpriced are easier to short. Saw this yesterday, but I'm like, is this gonna be a trap? Said in the market review, I'm like, man, watch this area, see what happens. I hope it flops, but that's things that aren't bullish. I'm seeing a lot of red low of the day. Seeing a lot of red low of the day in a lot of sectors. XLB just hit it. XLI just hit it. AA, Caterpillar, SPY, right? SPY just hit the high and low of the day. Yeah, I mean, let's look at the SPY. I'll end it there. Good question. Can it bounce off the 20-day? It's so far away. It bounced off the February top. I don't really see it bounce off of it. Looked like it just got close. TSM low today. Yay! Man, that's one of my bigger shorts. Hope that thing gets smoked. I mean, I personally, again, this is the Fed day, right? If we fill this formation without a Fed day on no news, that's distributive, because that's what sometimes can be very confusing for the average retail trader. Like, what is going on? Every day. Like, think about how many people will probably have say they bought yesterday on the breakout, right? How many people bought this morning, and how many people are anticipating the move going higher? Well, again, my indicators of retail traders they're all bullish. Like, they're insanely bullish. They're talking junk. Like, they're literally uber confident beyond the point of even logical. Like, right? Like, they're talking junk about metals. They're talking junk about Nvidia. They're talking junk about Meta for show. They're talking junk about Apple. I mean, I'm seeing a lot of people getting very emotional. Like, hey, this is going way higher. It's like, okay. But this is the thing, right? At the lows, when how many people have seen a short bottom? Like, at the lows, people are adamant that it can only go lower. So keep that in mind. All right, I'm going to wrap it up, man. I love chatting with you guys. I appreciate everybody's support, love. Then interactions, again, asking the questions. Again, don't have an ego. Ask a question. I'll try to help out. And if I'm wrong, I'm wrong. You'll be wrong. Everyone's going to be wrong. I try to explain this to people. Like, if you're trying to trade through perfection, you can't win. You know how they say, like, no risk, no reward? Scared money doesn't make money? Yes, that's all true. You have to be willing to risk. But defining your risk, being good about risk management, being able to admit when you're wrong, that's part of it. But the goal is to obviously win at higher percentages, right? Well, if you do what the masses are always doing, be careful. And again, not to be a contrarian always, but again, I still think it, like, super rips in a bear market are to be shorted. So, all right, I will see you guys and gals in the Discord room. Hit me up if you got any questions. If not, have a great weekend. Cheers.